I think that MSTR has a very fair chance of being the biggest company on planet Earth. Currently, Strategy is sitting at around a $40 billion market capitalization. The biggest company on planet Earth right now is 125 times bigger than Strategy with 5.1 trillion US dollar in market cap. Because if you believe in Bitcoin and you believe that this is the most valuable asset on planet Earth, wouldn't it be logical that the company with the most Bitcoin at least has a shot at being the biggest company on planet Earth, especially given the amazing track record of the ability of Strategy raising money to buy more Bitcoin. Remember, this was once a $500 million company, and now it's already a $40 billion company. And I believe MSTR can be a $1 trillion company. And this is what I'm going to talk about with one of the experts, one of the insiders in the Bitcoin treasury space, Boyd Cohen. I absolutely loved talking with him about the future of Strategy, about the future of Bitcoin treasury companies, and why he is so bullish on Bitcoin and on Bitcoin treasury companies. Enjoy. Let's talk about Bitcoin treasury companies, because with Bitcoin falling, treasury companies tend to fall even harder than Bitcoin. What's your current read on where Strategy, Strive, and all the Bitcoin treasury companies are standing and what that means?
I think we went through a hype cycle around treasury companies, maybe 18 months or so ago, where everyone and their brother wanted to start a treasury company because they were hot. And, they were hot in part because Bitcoin was also hot and running. And, the early treasury companies, Metaplanet and Strategy in particular, and then some of the emerging ones that were gaining traction, like Smarter Web, were really exploding. They've come back to earth. They're maturing as well. I think, in each market, they're kind of iterating and evaluating where the sweet spot is, regardless of where Bitcoin is on its price journey with fiat. My long-term thesis hasn't changed at all about Bitcoin treasury companies. I have the same conviction I had before. And I know, even you yourself were sort of anti, or at least not very interested in treasury companies for a very long time. And it's been very recent for you that you kind of got on board. Last year in my book, one of the chapters was just on treasury companies, and my thesis I espoused then, that I still hold today, is that a major amount of economies that have a money printer are going to be subject to a speculative attack on their fiat via treasury company, and it'll work. When you have a money printer that can just, debase the currency indefinitely, you have an arbitrage opportunity. And that's what all these treasury companies are doing. And I think, Saylor and Strive in particular have really landed on what looks to be a very winning formula. If you define winning as stacking Bitcoin as much as you can, they found the model to stack as much Bitcoin in a way that's accretive to shareholders. So your Bitcoin per share price indicator goes up. In the end, that's really what they're for me, BPS, Bitcoin per share, is the ultimate goal of treasury companies. How much Bitcoin can you have on your balance sheet for every share of stock you've issued? And as long as you can keep growing that, if your underlying conviction and thesis about Bitcoin remains, which, there's some people that are losing that conviction, but if you have that conviction on Bitcoin long term, then I don't see a future where every company in every country with a money printer that has the most Bitcoin in that country will be the most valuable company in that country. So that's the thesis I explained in my book, and I still share today. At least the top 50, 80 capital markets in the world with their own money printer, they will have a speculative attack on fiat. They will have a treasury company that succeeds at scale and the one that has the most Bitcoin per share and the most aggregate Bitcoin is going to win. They will eventually become Bitcoin banks. They will have all kinds of other revenue streams. They're holding the most scarce asset in the world. I mean, people seem to forget when the price is down like this. There's going to be 21 million Bitcoin ever in the world. There's 20 million already in circulation. 4 or 5 million is lost, supposedly. Increasingly, they're going from paper hands to diamond hands. They're going from OGs to institutions. Not a great thing for the decentralization of Bitcoin in terms of the holder supply. And a lot of us that have some cypherpunk ethos, I may not be the poster child for a Bitcoin cypherpunk, but I have some of those values. You know, is it great that we're seeing the Bitcoin change hands from individuals to institutions? I don't know. I would rather it be held by more people than by institutions and companies. But if Bitcoin was going to monetize, which has been the vision forever, that eventually would become the world's money, not just a store of value, then this was inevitable that institutions would get on board, and it's just part of the journey Bitcoin's on. So if you have that conviction that Bitcoin is eventually, gonna surpass anything the fiat world has ever seen in terms of purchasing power and everything else in a deflationary world with AI, then there is no alternative view to accept other than that companies stacking Bitcoin now, while Bitcoin is fairly affordable in the scope of things, are positioning to be the world's most valuable companies. And I am 100% convinced at some point in my lifetime, Strategy will be the world's most valuable company. It may take a while, but it's coming. So again, your zooming out question for retail Bitcoin holders is also applicable to treasury companies. People want to know, like, rest in peace, like, call the treasury space dead. It's not dead. It's not hyped anymore, but there are people building smartly in the treasury space that are stacking Bitcoin for their companies. And those companies are going to be wildly successful. It's just going to take more time than some of us thought.
I just looked up what the strategy share price was last time when it went up on the upside as it is right now. And it was around September 2024, which was the same share price that strategy had then right now. The only difference, now they're holding what, 850,000, roughly around that number, Bitcoin. Back then they held 250,000 Bitcoin.
There you go.
So like more than 3x, almost 4x that number, which is crazy to think about how much more value you're now getting. And back then, when it hit that 140, 150 US dollar mark, it went on a streak up to, what was it? Up to like 400 per share, which is crazy to think about. With not even a little, like not even close to how many Bitcoin they hold now. Now the MNAV and that was very expanded, was probably like a bubbly area, or was like a little bit too overrated, a little bit too hot at that moment. But man, like it, for me, strategy looks like a deep value buy currently because it just went down the last year 62%. And yeah, like even zooming out from the all-time high, what was that? Yeah, for 430 down, like almost 70% down from the all-time high that it hit. Like it's almost like hard to ignore at that point, and that's why I'm also like I had to get educated on it. I had to see it, and it was Chase Palmery that told me like, oh, it could be the biggest company in the world because it has the most Bitcoin in the world, and I'm like, that actually makes sense, and that kind of explained my journey down.
No, for sure. So I mean, I agree with Chase, and it's the same thesis I have. You stacking Bitcoin, as an individual, as a company, as a government, you're going to be in a better position. And we're starting to see the arms race in Bitcoin at the nation state level too. And I think eventually it's going to be seen as the world's superior money and reserve asset, and we're getting there gradually. And maybe it'll be gradually, then suddenly. I don't know. I mean, that's kind of the view I've had. that it was going to be like that, and there's going to be some shocks, and then suddenly out of nowhere it's like, whoa, where did Bitcoin come from? But maybe it's going to be this, the last couple of years have felt more like it's grinding up, grinding down, grinding sideways, chop solidating, whatever you want to call it. So I don't know what's going to happen long term, other than I know that fiat is going to die, is as it always does, and Bitcoin will not just survive, it's going to thrive. And I know in an AI world, it's going to do even better. And thus, any companies building on Bitcoin, stacking Bitcoin, creating financial engineering ways to acquire more Bitcoin, however they can do that. They won't all be like the classical treasury strategy. They'll use different models. We've been having a debate in this sort of Bitcoin treasury community forum we're in, where there's some diehards who follow particularly strategy really closely. Some of them are also getting pretty enthusiastic about Strive, and I've been enthusiastic about them forever, in part because their team is world class, starting with Matt Cole. But they got Ben Workman and Jeff Walton. They've got some great people on their team that are extremely sharp and doing all the right things, and you can see that they've now got the Bitcoin printer going faster than strategy at the moment. Like over the last couple of weeks, they've been able to stack more Bitcoin than or at least proportionally way more Bitcoin than strategy is at the moment. But they're following very similar strategy. But the debate I was going to mention, which I think is really interesting, is like a couple things. One is, what is digital credit? So Saylor's been talking a lot about digital credit, and there's a narrow view of digital credit, and there's an emerging broader view of digital credit. Like, is it everything in the tent, or is it just one thing? So some people in that community want to say digital credit is only one thing. It's a preferred share with no principal payback that tries to get to par, and you can alter the interest rate a little bit. You try to get it to 100, and when it gets over 100, you're issuing more of this preferred share, which is then used to stack Bitcoin. My argument is, if Bitcoin is digital gold, which is what Saylor calls it, and a lot of other people do too, then any credit that's built on Bitcoin is also digital credit. So it's not just one type of preferred instrument. And the reason I bring that up is because in my Bitcoin company, Arcadia Bitcoin, we actually have two loan products that are, in our opinion, forms of digital credit. And they're being used for retail or high net worth investors, but they're also used by us as a company as well to stack more Bitcoin. There are different kinds of instruments, but they have similar outcomes. And the other thing that's similar to this argument that I want to bring up is like, it's timely. We're talking about this now. I don't know when the pod will come out, but, the week of around June 1st, well, let's say that Strategy made a sale of 32 Bitcoin, and that created a whole lot of chaos in the market with people panicking that, well, Saylor always said you never sell your Bitcoin, you sell your kidneys, you do whatever, but you don't sell your Bitcoin. And I think all of us who are diehard Bitcoiners kind of feel the same way, which is why a lot of people use Bitcoin backed loans to like fund their fiat needs. If they're sort of fiat poor, I live fiat poor. I try to stack as much Bitcoin as I can. So sometimes I need to take out loans. So I take out loans against my Bitcoin. So that's like a common thing a lot of people do. But my point being, when you think about what the digital credit strategy is and the treasury strategy in general, it's about stacking as much Bitcoin as you can, as we've talked about. Well, that can involve using a lot of different levers at different times in a company's journey or an individual's journey. And there could be scenarios where it even makes sense to sell some Bitcoin. What is the current value of Stretch? 11.5%. Why does that model work? If you go back to zooming out as you were, 4 years is an important cycle in the Bitcoin world. That's the halving cycle. It's been historically tied to price evolution in Bitcoin as well, bull and bear markets, although there's a lot of dispute whether that's sort of a continuous cycle we'll see in the future, or if it's already been broken. But the point being, over a 4-year cycle, as you showed with the graphic, Bitcoin price goes up. So the idea is, if Saylor is roughly right, that the CAGR, the annual growth rate of Bitcoin, is going to be around 30% through 2045. Okay, so if Bitcoin is going to go up around 30% a year with annual fluctuations, but over a long enough time horizon, it will average 30% per year. And you're paying interest at 10 to 12% on something to stack more Bitcoin, it's in your best interest, even if at some times in that journey, you have to sell down some of your Bitcoin to pay off the debt you've accrued to acquire the Bitcoin. That's just a type of carry trade. Some people would call it something different, but for me, it's a carry trade. It's like people going to Japan to take out like near zero interest loans to then go buy something else that's going to appreciate in value way more. And they're willing to absorb the interest payments from Japan to actually stack something that's going to grow faster than the interest they're going to pay. So where I'm going with this around the Saylor strategy is that there's been a lot of disputes and there's the Peter Schiffs of the world, but a lot of other people that are questioning, even in the Bitcoin community, like some people I respect, like at OnRamp. I don't know if you've heard those guys. They have very strong anti-Bitcoin treasury views. They're Bitcoin maxis, they're dieharders. I share a lot of the values and views they have, but I don't agree with a lot of their views on the treasury play. But a lot of people in and outside of Bitcoin think that it's some kind of Ponzi scheme. It makes no sense. How can they ever plan to pay back the dividends if they don't have revenue against the dividends? But it comes down to, what's your conviction on long-term price appreciation of Bitcoin? And if the long-term price appreciation is projected to be significantly higher than the interest rates they're absorbing on their preferreds, then even selling down some of their Bitcoin along the way could still be smart. They're still stacking more Bitcoin than they're selling. And I think, part of the issue is that Saylor has been so vocal: sell your kidney, sell your home, but never sell your Bitcoin. And now he's selling his Bitcoin. There's other reasons they're doing it. Like, it's going to help them with inclusion in the S&P 500, which is going to be great for them to create passive buying of strategy stocks. So there's reasons they're doing it that make sense. But even if they just plan that some of the dividend payments will come from selling some of their Bitcoin, it's still smart if you buy this medium long-term growth.
It's crazy, yeah. And we see it like right after he said it, like the Bitcoin market is tanking. Even though he said it already before that he might do that. He already did it before 2022. It's not the first time he sold Bitcoin. But yeah, his viral moments with sell your kidney if you must, but keep your Bitcoin might have something to do with that. I don't know. And maybe there's also other market forces. I think that people think that he's a forced seller and think that's a bad thing.
Yeah.
Because they don't have the long-term view of, hey, he's raising 40,000 Bitcoin in that 1 week and has to sell like 50 Bitcoin in the other week to cover the dividend payment. Even though I think the 32 Bitcoin that he sold in that week, it's literally just to test the market. I personally think that he did it just to test the market, because
100%.
did he really need it, that like 2 million?
No, he did not.
It's like pocket change for strategy. So I think he literally just tested the market and see what came out of it.
It was testing the market. It was telling the market, I am going to do this sometimes. I've told you, now I'm showing you I'm going to do it. It was proving to the S&P 500 that he's willing to sell the Bitcoin, because in the last review of the company's potential inclusion in S&P 500, they literally spelled out that one of the reasons that strategy wasn't included was because they have all this Bitcoin, which they're not prepared to value in S&P 500. They weren't, as face value of the asset. And on top of it, that this company, even though we don't really value the Bitcoin on the balance sheet, the fact that it has a value in the market and they're never selling it, that is a concern for us, because then how are they going to meet the dividend payments if there's a bad capital market situation? So they're doing it for that as well. And he's also, the other reason he's doing it, we haven't mentioned yet, is he's selling off some Bitcoin they bought at very high prices, and it's a tax loss or a tax benefit for them. So there's good reasons to do it, even though it panicked the market. And it's not great unless you're in a position where you have excess cash right now and you can stack more Bitcoin under 70,000 again, which it just dropped today. So yeah, it's a market that's still trying to understand what the treasury strategy is and how it makes sense. And I think it makes sense to anyone who truly understands Bitcoin, even though some diehard Bitcoiners hate it. So I get why they hate it, to be honest, but I think they're mistaken in a lot of ways. I get the cypherpunk values. I get the idea of wanting it to be decentralized and held by billions of people in the world, not stacked by one company. But this was going to happen one way or the other. Companies, governments, institutions, as they start to understand the power of Bitcoin and what's happening with fiat. And, Saylor got there before anyone else did. And, good for him and good for everyone who believes in him and has believed in him. I think they're going to be paid off handsomely if they have the low time preference and they don't sell now when the stock is down.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.